Morning, Muthu.
Yes. I mean,
Muthu, should we wait for next 5 10 minutes more to add few more people, or should we start? I guess we should wait for some time for more 5 10 minutes.
sure, Ashish. So, happy to do it for another time you
Sorry.
can start the same.
So, hello, good morning, everyone. Today, on 11th of October, we are starting up with a very new course under the preview of Simandhar Education, which is known for the CPA, EA, and the CMA classes. We have partnership. We have got ourselves partnered with the ACCA board, and now we are starting up with a new fresh course that is ACCA. So let me just show you some brief or give you some brief about the ACCA course. Let me just share my screen with you guys. Just let me know when once my screen is visible to you all. So yes, we are starting up with the ACCA course, which is a global qualification for a professional accountant. Let me first introduce myself. I am a CA and a CPA Chaturvedi. I've completed my CA in 2021 and I completed up with my CPA course in 2023. Since then, I have been working in the business finance domain in different companies. Previously, I have worked with Cipla and now I'm working with Reliance as a senior manager. Let's start talking about the ACCA course. ACCA is nothing but a global qualification for all the professional accountants. Hmm. What is all about ACCA? So ACCA board has a headquarter in UK. It is the qualification of the ACCA is recognized in countries like India, UK, Australia, New Zealand, US. It has a base in almost 180 plus countries. The ACCA board was founded in 1904 with 5 lakh of students in right now are registered with the ACCA board, along with 7,300 and plus employers who have been providing the employment opportunities for the students who have been clearing the ACCA exams. There are 2 lakh plus members registered with the ACCA board right now. ACCA board is valued for its international accounting standard, which is also called as the IFRS. One should know why they have to choose the ACCA or what are the benefits of choosing an ACCA course. ACCA course provide you with a global recognition. They also provide you with a flexibility in the study and exams. So it's like you can prepare yourself and you can appear for the exams when you want to appear for. It's not like there is one particular site, particular month in the year only when you can appear for the exams. You can prepare well, you can appear for the exams anytime when you want. It provides a diverse career opportunities for you in fields like accounting, audit, finance, and consulting. So ACCA does not limit to you just with just one career opportunity in future. ACCA provides you with different career opportunities under its preview. It provides it, you can join the company as an accountant, you can join the company as an auditor, or you can join any of the big four firms for the audit rules. You can join the company for the finance role, or you can join the management consulting groups for providing consultancies to different companies, to different businesses. ACCA course is very affordable. The cost of pursuing the ACCA is not that high. You can easily pursue the ACCA course within just 3 to 4 lakh rupees. Starting salary package. This is something that we really look for when we are choosing any of the particular course. So starting salary package of 6 to 8 lakhs, but it can go up to any level. Once you gain your experience, once you grow in your career, you can reach up to any level in ACCA. You can imagine yourself being the CFO of the company, leading a company from the front. So you can expect what ACCA course provides you with. What are the eligibility criteria? You can either start your ACCA course immediately after 12th standard, either you can provide start your ACCA course after graduations, or you can even start your course after CA Inter or BCom. So if you are starting up after 12th, you have to start with your foundation in accountancy, this thing. If you are starting up with after B graduation, you can directly enter at the knowledge level. You don't have to go through with the foundation accountancy. If you're starting up after BCom or the CA Inter or CA Final, you get some exemptions for which you become eligible. What are the ECC code structure? What is the ECC code structure? So ECC code structure follows like this. You have three different levels. That is applied knowledge, applied skills, and strategic professionals. What is applied knowledge? Applied knowledge basically has just three papers, and these are at the base level. These are the base level exams. What does these three papers have? They have business and technology, they have financial accounting, and they have management accounting. Then we have applied skills. Applied skills consist of 6 papers. Those are the corporates and business laws, taxation, financial reporting, performance management, financial management, audit, and assurance. In the exam sense, we have one another level that is strategic professionals, which is strategic business leaders. So in strategic professionals, there are 2 papers which are compulsory that you have to give: strategic business leaders and strategic business reporting. Apart from these 2 papers, we have choice between 4 papers out of which we have to select two for clearing out the strategic professional level. So what are the 4 options that we have? The first one is advanced audit assurance, advanced financial management, advanced performance management, and advanced taxation. Out of the any four, we can choose two. We can choose either on the basis of the passing percentage. We can choose either on the basis of what career prospect do we look out for. This is the choice that we have. So the ACCA boards provide us with the 4 papers out of which we have to select two. So once you are done with all the 3 levels of examination, that is the knowledge level, the skill level, and the professional level, you also have to cover the ethics and professional module to become eligible for the ACCA member. Along with, so it's not just simple to become an ACCA member. To become an ACCA member, along with completing all the 3 levels of examinations, along with completing the ethics and professional skill module, you also have to go a rigorous training for 3 years. Like you need to have 3 years of practical experience to become an ACCA member. Once you tick mark all the criteria, that is knowledge level exams, skill level exam, professional exams, along with the module and the practical experience requirement of 3 years. You become eligible to get yourself registered as an ACCA member. What are the how much duration one should now start questioning what is the time limit in which we can complete the ACCA course. So if we are starting the exams, if we are starting with the CPA course immediately after a 12th, we have to give all the 13 exams. That is three exams of the knowledge level, six exam of the skills level, and four exam of the professional level, which almost takes around 3 years. If we are a commerce graduate, we got four exemptions and we just have to give 10 exams. What are the exemptions and which exemption we are talking? I'll cover that after this particular presentation. That what exemptions are we eligible for if we are starting up with after the commerce graduate or the CA inter or CA final exams. So if we are starting as a commerce graduate, we just have to appear for 9 papers instead of 13 papers. And these 9 papers form part comes from the skill level as well as from the professional level. So your knowledge level get completely exempt. And in that case, you can complete your entire ACCA course within just 2 years. If you have cleared your CA inter, then you just have to appear for 7 papers, not 13, not 19, only 7 papers out of the 13 papers that we have. And still you can complete the syllabus in 2 years. If you are appearing for your exams after you have cleared some one group of the CA final, you just have to give either 4 to 6 papers based on the eligibility that you counter for, and you can complete in 1 year. If you are a qualified chartered accountant, you just have to appear for four papers. That is the professional level exams. Your knowledge level and your skills level get exempted completely, and you can appear for those 4 papers in just 6 months, and you can complete up with your ACCA exams in just 6 months. What are the skill gains when you pursue an ACCA course? What the corporates are looking for? On what basis you will become an eligible for a better job opportunities once you are a ACCA member, or once you have qualified your ACCA exams? It helps to develop your leadership and management skills. It helps to develop your strategy and innovations. It provides you with financial management, sustainable management accounting, law taxation, audit and assurance, governance, risk and controls. These all comes from the syllabus that we are appearing for, that the papers that we are clearing out. These papers helps to provide this skill set to us. Once we are done with all the papers, we gain all these. Along with when you're pursuing the ACCA course, you get yourself well equipped with the skills of stakeholder management, because the 3 years of practical experience that you're gaining for becoming an ACC members, you very well gain the skills of relationship management. You also know what are the ethics and the professionalisms that you need to follow when you are an ACCA member and taking up that course. You also gain the skills of corporate reporting. Now, the most important question which everyone has: what are the career opportunities I will get once I will be an ACCA? This is something which each and every of the student, be of any of the course, is looking out for. ACCA course, once you clear your exam, once you become a member of the ACCA, you become eligible for, you can get job either as a finance accountant, you can job as a management accountant, you can get job as a tax consultant or an internal auditor or a financial analyst. See, from this only you can just identify that ACCA does not just provide you with one particular job opportunity, but it opens multiple options for you. You can get your job based on your skill set, based on your knowledge, based on your experience, based on your need in any of the domain that you're looking for. Which are the employers or which are the companies that will be providing job opportunities to you? The big four firms are hiring ACCAs in a large numbers. Then you have multinational companies, banks, consulting firms, and the startups. Once you grow in your career, you can start off with your as a financial analyst at the final level, basis your experience and everything. You can reach up to the level of CFO, which I've already talked about in the previous slide. See, you're starting up your CPA journey as a fresher with 6 to 8 lakhs. Once you become your CFO, you can even cross 1 crore plus. This is the power of the ACCA course that we have. Let's compare ACCA with the other qualifications. So we are comparing over here ACCA with the CA course that we have in India, with the US CPA, and with the US CME. If we talk about the global recognition, ACCA gets recognition in 180 plus countries. CA is in India itself, along with either in Dubai. CPA, basically they have their background in US, and CMA is also in US. How about duration each of the particular qualifications takes? If you are pursuing an ACCA course, it takes you around 2.5 to 3 years maximum. This becomes eligible if you are writing all the 13 papers. As we discussed previously, if you're pursuing your CPA after CA inter or CA final, your duration becomes very less. If you're pursuing CA course, you have to give 5 to 6 years. If you're pursuing CPA, 1.5 years. If you're pursuing CMA, 1 or 2 years. What is the pass rate? Because we know this is a professional exams, and we also know that professional exams is a very difficult to pass. So for ACCA, it's 40 to 50%. In CA, it's less than 10. CP, it's 50 to 60, and CM, it's 45 to 50%. So if you're pursuing an ACCA course, you have 50% probability to clear the exams. What are the focus which the all these qualifications are looking out? ACCA focus on the IFRS, which is also called as the International Financial Reporting Standards. In CA, we have NDS. In CPA, we are following the US GAAP. In CMA, we are following the management accounting. Now, what's the cost of pursuing the CPA ACCA course? So, for pursuing the ACCA course, this is the initial registration that we have to pay, which is the £30. Then we also have to pay the annual subscription, which comes out to be £135. Then we have knowledge level exams, which cost total in India, if it terms out at 40,185 rupees. If converting, so it's $84, converting £84 per paper. If we convert it at the current rate of 119, it turns out to be 10,000 one pay for one paper. For 4 papers, it turns out to be 40,185 rupees. If we are writing the skill level exams, we have to pay £145 per paper. If we are writing professional exams, then we have to pay £202 for each paper. So this is basically the cost of doing an ACCA course. Along with this, we have classes that have been provided by Simandhar. So Simandhar comes. I'm happy to announce that we have an exclusive partnership with the ACCA board. We become an eligible member for providing the classes for the ACCA students recognized by the ACCA board. What fees do we charge? So we have different fee structure for different as per the different levels. One can either apply for single paper, one can either apply for the entire skill set or the professional set or the knowledge set exams. Basis this, the fees is charged by the ECCA course. Along with along with that, the Simandhar is also providing you with the book set, with the test book set. The test book set covers the questions provided by the ACCA board for the practice of the students. It contains more than 1,500 to 1,000 plus questions, which if the student will practice, they will be able to clear their exam very easily. Along with that, Simandhar Education also provides you with the books, which are with the soft copy books, which are free of cost, and with the hard copy, which are chargeable at 3,550 rupees per book. So basically, this is about the ACCA course. Now, if you have any questions, you can just take those questions up. You can ask those questions. Now let's talk. So one point that I'm left with is the exemption parts. What are the exemptions that the one is getting if they are pursuing the ACCA course after each of the level? So if one is a inter CA fully qualified, like one student has completely cleared all the papers of the CA inter, then and they have also cleared the CA final, they become eligible for exemption in 9 papers. These 9 papers are nothing but your applied level, applied knowledge level, and applied skill level papers. If you have passed both the groups of CA inter, you become eligible for exemptions in 6 papers. Those 6 papers are business technology, management accounting, financial accounting, corporate and business law, taxation, and the financial reporting. These are the typical 5 to 6 paper exemptions that you get if you have cleared all the papers of your CA inter. If you have cleared only just one group of CA inter, you become eligible for exemption in 4 papers. And those 4 papers are business technology, management accounting, financial accounting, and law. Depend on the subject that you have cleared in your CA inter. So suppose if you have cleared your CA inter group 1, you only become eligible for exemption in financial accounting as well as law. Your management accounting will not become an exempt. If you are a fully qualified CPA, like even if you are a CPA, you get an exemption. What exemption that you get? You get exemption in 4 to 5 papers. This is the path that you have followed. What are the exemptions that you become get if you have cleared your CPA exams? You get an exemption for business technology, MA that is management accounting, FA that is financial accounting, law that is corporate and business law, and the taxation paper. If you are a US CMA and you have passed both the parts of the CMA exams, you become eligible for exemption in management accounting, and financial management. If you are a BCom graduate from India and you have completed with your BCom degree, you get an exemption for these 5 papers. Those are business technology, management accounting, financial accounting, taxation and business and corporate and business law. If you are a BBA graduate or an MCom graduate, you become eligible for 3 exemptions. Those are business technology, management accounting, and financial accounting. If you are a CMA qualified, that is the ICWA course in India that we have, you become eligible for management accounting, financial management, and taxation. If you are a CPA Australia, before we were talking about CPA US, now we are talking about CPA Australia or CA New Zealand, and we are a fully qualified CPA Australia or CA New Zealand. We become eligible for exemption for all the skill level and the knowledge level exams, and we just have to appear for the strategic professional entry. So these are the exemptions that we have if we are pursuing the ACCA course and if we have reached at any of the stage right now, that either we have cleared CA final or IPCC both groups or CA intergroup one, or we are fully qualified CPA US or CPA Australia or CMA US or CMA India, or even if we are a graduate holder having a BCom degree or a BBA finance degree or an MCom degree. So now let's start with the session that we are here for. We are here to start with the financial accounting revision. Meena and Sia, do you have any questions with respect to the presentation that we have till now? Okay. Now let's start with the revision part. So the first revision session that we are starting up with today is the financial accounting. So the first paper that we are covering up for the revision purpose is the financial accounting. To understand what is financial accounting paper all about, let's know what is the account means. What is the definition of the accounting? Accounting is nothing. It's an art of what? Art of recording, classifying, and summarizing in a significant manner what what we have to record, classify, or summarize. We have to record, classify, or summarize what? A money transactions and events which have a financial character. So, if we are recording the any transaction that have a significant financial character involved in it, it's a called as accounting. What is the accounting cycle that we follow? First, we incur a transaction. From transaction, we went we prepared the journal entries that we call as. From journal entries, we prepare the ledger. From ledger to we move on to trial balance. From trial balance, we move on to financial statements. And from financial statements, we prepare the financial statements that are relevant for the stakeholders. So this is the cycle basically that we follow. We incur a transaction, we record the transaction through journal entries. After recording the journal entries, we classify them under different ledgers. And then we summarize them in the form of trial balance. And once we are ready with the trial balance, we present it in the form of financial statements to the stakeholders. Now, the next question is, what is the basis of accounting? What basis do we follow? So we have two bases of accountings that are there. The first one is the cash basis, and the second one is the accrual basis. So, what do you mean by cash basis? Under cash basis, we record only those transactions which has money involved in it. Either we are receiving the cash or either we are paying the cash. So, under cash basis of accounting, we record income only when they are actually received. We record the expense only when actually they are paid. But in the modern day of accounting, what the normal companies usually follow, What is the normal practice of accounting that is followed across the globe is the accrual basis. So what's the difference between the two? So we have just read that under cash basis of accounting, we are recording the income or the expense when they are actually received or when they are actually paid. But under accrual basis of accounting, we are recording the income when they are earned or accrued. That is whether received or not. So what do you mean by accrued? So I'll give you a simple example. You made a sale of rupees 5 lakh to a customer. Suppose if the sale was made on a cash basis, do you become eligible to record that particular transaction as your income? Under cash basis, yes, it's 100% eligible for recording because we have received the cash. Under accrual basis, yes, it becomes eligible 100% eligible for recording because we have made a sales and we had earned an income of 5 lakh rupees. Now, let me just twist this example a bit. We have made a sale to a customer for 5 lakh rupees for a customer have a credit period of 5 to 5 days. Now, when will you record this particular income under cash basis? Will you be eligible to record that income right now under cash basis? No, you will not be allowed to because you have not received the cash. When will you become eligible for recording this particular income as a cash under cash basis? Under cash basis, you will record the same once you will be receiving the cash after 5 days. So the transaction that has happened today, you will be able to record that transaction only after 5 days because you will be receiving the cash after 5 days. Under accrual basis, if we talk about, we have made a sale of 5 lakh rupees to a customer having a credit period of 5 days. We will be able to record the transaction. Can you help me out when? So let me just answer this question for you guys. We will be able to record this transaction today itself because accrual basis says we can record the income as and when they are earned or accrued, whether it is received or not. So when are we going to receive this particular cash of 5 lakhs in the real life? We are going to receive this cash after 5 days. But have we earned this income today? But have we earned this? Yes, we have earned this. Since we have made the sales to the customer becomes eligible for the payment. The customer has to pay to us. So we have earned the income, we have transferred the risk. Since we have earned the income and it has not yet been received, but still we can record it as an income under the accrual basis because incomes are recorded when they're earned or accrued. My 5 lakh rupees has been accrued. I will receive that 5 lakhs after 5 days. Similar way, we record the expense when they become eligible for payment and not when they are actually paid. So let me just take an example for the expense also for you. We have taken a building on a rent and and the rent cycle is like we have to pay rent for every 6 months after the end of the 6 months. So tell me, if you're preparing your profit and loss account for the current month, are you gonna record the expense, rent expense for that month in your P&L account if you're following the cash basis of accounting? No, you will not record. You will record it when you have actually paid the expense after 6 months. And how much you will record? You will record for the entire 6 months in that particular month itself. But if you're following the accrual basis of accounting, you can record the proportionate rent that pertains to that specific month in the month itself when you're preparing the P&L account, even though you have not paid the rent. Since you have used the building for that specific month, you become eligible for payment of rent for that month. That means you have actually incurred an expense, but you have not paid it yet. So you become eligible for recording of an expense in the particular month itself, and you don't have to wait for the 6 months when you will be actually making the payment to the owner. Now let's move on from basis of accounting to what are the elements of the financial statements. So we have five elements which are the core elements of the financial statements. Now, what are those elements? Those elements are nothing but your assets, liabilities, and equity, which form part of your financial statements, also called as the element of the financial statement, also called as the statement of financial position. That is the balance sheet. When we were when we have started studying for the accountancy as a subject, the first equation which the teachers teach us under the accountancy is the assets equal to equity plus liability. Equity plus liability is equal to assets, which forms part of my balance sheet. So, what is asset? Let me just ask you a question. What is asset? Asset is nothing but a resource that is owned by the company that have a future economic value. So, let me just take an example. The company owns a stock. Does it become an asset for the company? Yes, it becomes an asset for the company. How? First, company has the resource under its name, so it's company is the owner of the stock. How will it generate the future economic value for the company? When the company will be selling that particular stock in the market in terms of finished goods, it will generate future economic values for the company. Therefore, we classify the stock that the company has as an asset for the company. What are the liabilities? Liabilities are the nothing but the obligations of the company, either to the other entities, to the creditors, individual lenders, to the banks. What are the liabilities? If we take an example, suppose I'm starting up my own business. I have my own capital of 2 lakh rupees. But to start a business, I need at least 5 lakh rupees to be available with me. How much do I have? I have just 2 lakhs. I still need 3 lakh rupees to start my business. So what I will do is I will either approach banks or other entities to lend me something so that I can start that business. The 3 lakh that I'll be taking as a loan from the bank is nothing but my liability that I have to pay in the future. Or let's take another example. You purchase raw material for your business from the creditor on a credit period. Since you're purchasing the raw material on credit from your particular supplier, your supplier becomes your creditor because you get under a present obligation to pay the amount of raw material that you have purchased from him in future once your credit period expires. What is equity? The amount that the owner invests in its business is the equity. So in the example that I've taken, the 2 lakh rupees that I'm investing in my business is the equity of the business. What are the incomes? We already have talked about income. What when we make the sale, it's an income for us. If we have deposited any FD in the bank, whatever the interest that we are generating from the sale is an income for us. What are the expenses? Expenses To run any business, we have to incur following expenses like we have to pay the rent, we have to pay the salary to the staff, or if there is a decrease in asset, that we also call as a depreciation. When we have purchased a asset and the asset life is getting depreciated, the asset life keeps on reducing. We incur depreciation expense on the same. Depreciation expense is not a cash expense, but it's an expense that decrease our profit and loss. Now, what are the components or the complete set of financial statements? So, the components of the financial statements. There are five components of the financial statements. What are those? The first one is the statement of financial position. What is statement of financial position? Is nothing but your balance sheet, the balance sheet that you prepare. So what are the elements of the balance sheet? Elements of the balance sheet are nothing but your assets, your liabilities, and your equity. Now. What is the next component of the financial statements? It's a statement of profit and loss or the other comprehensive income. What does profit and loss do? It provides you with all the incomes, it provides you with all the expenses, which helps you to determine what is the actual profit or loss that the company has made. What is the other statement? The other statement is the changes in equity. What are the changes in the equity that has been made in that particular year? Next, it's statement of cash flow. Statement of cash flow. What is that statement of cash flow is all about, and what are the components of this cash flow statement? Cash flow statements provide you with the real balance of the cash. Where have you actually incurred the cash? Where have you actually paid the cash, or where you have actually received the cash? The cash flow statements divide the cash transactions under three different buckets. That is, what is the cash flow from the operating business, which is also called as cash flow from operations. What is the cash flow from your investments? How much have you invested, or how much cash have you invested in the assets, or how much cash have you realized from selling the assets? Now, the third part of the cash flow statement is the cash flow from financing. Like it includes how much cash we have obtained or we have received by taking loans or by issuing the debentures or by issuing the bonds, or how much cash we have actually paid under the financing, that is the repayment or the interest payments on the debentures or the bonds or the loans. When we combine all the three, that is cash flow from operations, cash flow from investment, and cash flow from financing, we actually receive the cash balance which is getting reflected in our balance sheets. So we actually ideally know where we have invested, where and what are the source and the payment where we have incurred the cash. Now, let's move on to the next point. Who are the users of the financial statements? So we have two different categories of users for the financial statements. Yes, it's right, internal and the external users. Who are the internal users of the financial statements? Internal users are your management, your owner, and your employees. Now, what is the management is looking for in the financial statements? Management uses the accounting information to make an operational and the strategic decisions, to assess what is the business performance, how the business is doing right now, and to control its resources. See, management will use this particular financial statement to know what all the resources that it has, how he has to use that particular resources in generating the economic benefits for the organization and to continue the business in the long run effectively. What is the owner looking for in the from the financial statements? The owner uses the financial data for what? To evaluate the profitability, to evaluate what are the growth perspectives of the business, and to get the return on the investment, how much the business is generating the returns for. Now, the other internal user of the financial statement is your employee. What is that employee looking out in the financial statements from the company, of the company? They are interested to know the financial health of the company, to understand whether they have the job security or not, whether their salaries will be credited to them on time or not, whether the company has the money to pay them or not, and what are the future opportunities that the employee can get if they will continue to be part of the company. Because if the company will go in a long run, the employee will grow in their career. The employee will be able to take a better roles. The employee will be able to provide more options to the company. Now, who are the this was the internal stakeholders. Now, there are external stakeholders also. Now, the question that will come into your mind is why the external you for external purpose the financial statement of the company is relevant. So there are various different stakeholders, external stakeholders, as I say, who are very for them the financial statements become very important. Who are those five external stakeholders? Or six external stakeholders. The first one is your lender, also known as your creditor. Why for creditor your financial statements become important? Since creditor has provided you goods on credit, that means you have to pay to your creditor in future. And since you have to pay to your creditor in future, your creditor becomes more important in your financial statements to check whether you will be able to pay him in future or not, whether you have the capability to pay him in the future the money that is pending from you to him. Your investor. Investors are also your external stakeholders who are interested in your financial statements. Why the investors are interested? To check whether if they invest their money into your business, whether they will be able to get proper returns that they deserve from your business or not. Whether if they invest their money will not sunk, they will be able to make better returns out of it. They check what are the long-term commitments that your business holds. What are the growth perspectives that are there in your company? What is the profitability that your company is providing right now? Basis all these factors in mind, they decide whether they have to invest in your business or not. Next come your customers. Now, the question that will come into your mind is why are interested in the financial statements of the company. The customers are interested in the financial statements of the company to assess the stability of the company, the product that you're providing to the customers. Even customers wants to know whether they will be able to get that particular product in the future or not from you, whether they can rely on you for the supply chain for the particular supply of the product in future or not. That's why the customer assess this from the financial statements of the company. Now your supplier. Why the supplier becomes important for you? Why your financial statements become important for the supplier? The supplier use the financial statements of your company to evaluate whether the goods that the supply is providing to you because will be required in future also or not. So suppose if you or Financial statement shows that there may be a chances that your company may not run properly. Will supplier be providing goods to you, or will the supplier? So suppose, let me just take an example. Your financial statement shows that your business will not run for more than 1 year basis because you are incurring heavy losses. Do you think supplier will be happy after knowing that? No, no. Supplier will not be happy after knowing that. Why? Because supplier was getting business from you. Supplier was supplying the goods, the raw materials, the parts to you for running your business. If your business goes down, then in that case the supplier business will also go down because supplier will lose one of its customer. They will not be able to provide to you the product that they have been providing and the making revenue out of you. That becomes that in that manner the supplier also uses your financial information to assess what are the growth prospects with the company. Now the comes the next person, that is the government or the regulatory authorities. Why government uses my financial statement? Government uses my financial statement to determine whether any tax, to ensure that the, the company is compliant with the tax laws, the companies are following the tax policies, and assess the overall impact of the business on the economy. Because at the end of the day, government, your business is contributing to the economy. So government has to assess what is the impact that your business has on the economy. The other user is the public. To, the public uses the financial statements of the company to assess the financial health of the company or to understand how the business affects the local economy and the community. So let's just revise who are the users of the financial statements. The users of the financial statements are divided into two parts. Those are the internal users as well as the external users. Now, who all are the internal users? Internal users are your management, who uses for controlling the resources of the company. Your owners to check what are the returns that they are getting from the company. Your employees to check the job secure for the job security purpose. What are the future prospects that the company will provide to him, or whether the jobs are stable or not. Who are the external users? Your lenders, your investors, your customers, your suppliers, and the public. Now, come the main question, which ACCA board has many times asked also in their exams. What are the qualitative characteristics of the financial information? Any guesses? Okay. So, the qualitative characteristics of the financial information are divided under two buckets. The first one are the fundamental qualitative characteristics, and the other one are enhancing qualitative characteristics. Now, what are the fundamental qualitative characteristics? There are two fundamental qualitative characteristics. Those are your relevance and faithful representation. Now, the question is, what do you mean by relevance? Relevance means the information that is contained in the financial statements are capable of influencing what? Influencing users' decision. As we see in the previous point that we were reading about, who are the users? The financial information, the financial statements that I'm providing, the information in that should be able to influence the decisions of the financial users, of the financial statements. So let me just explain you with an example. If the company is considering to buy a new factory, just hear me out properly. If the company is considering to buy a new factory, what is the relevant information for the same for the company? The forecasted cash flow or the information about the old factory which the company has sold? For me, the relevant information will be the forecasted cash flow will be relevant and not the information about the sold factory, because whatever that has been gone is sunk. What is going to benefit me is the forecasted cash flow that I'll be generating if I'm planning to invest in a business or if I'm buying a new factory. That is the important relevant information. The forecasted cash flow is the relevant information for me. Now comes your second point, which is faithful representation. Faithful representation. Now, what do you mean by faithful representation? Faithful representation means nothing but whatever information, the financial information that the company is providing, that the company is providing through its financial statements, through its financial statements should represent what has actually happened. Mark this with a red color because it's a very important this thing. Let me just highlight this part. It's the most important. Let me just rewrite this in a clear manner. Should represent what has actually happened. That is, the information should be complete. It should be neutral and most important, free from error. If you're providing the information which has actually happened, if you're providing the information which has actually happened, that is the complete information if you're providing without any biasness, and if you're providing without any error, the complete information, the financial statements, that means you are complying with the qualitative characteristics of faithful representation. Now, let's just ignore. Let's just take it as from an example point of view. If a company shows 10 lakhs in its receivables, it should truly expect to collect. That means if the company is showing 10 lakh rupees as a receivable, it should actually collect or expect to collect 10 lakhs and not 15 lakhs, with 5 lakh rupees as doubtful debt, which is ignored. So, if the company has, say, receivable of 15 lakh rupees in actual, but the company also know that the 5 lakh is a doubtful, the company may receive or may not receive in future. Then, when the company is preparing its financial information, it should properly reflect in that financial information that though the company is eligible to receive 15 lakh from the customer, but the company also knows that 5 lakh may or may not receive. So the company has created the provision for the same. And what the company is actually expecting to receive is just 10 lakh rupees. The financial statement should properly report this particular transaction and should properly reflect this particular transaction. Now, what comes are so we have read about the fundamental characteristics. Now comes the so now comes your enhancing qualitative characteristics. What are the enhancing qualitative characteristics? The first one is comparability. What do you mean by comparability? Comparability means the users must be able to compare the financial statements across time and also with other entities. That means. Let's take an example for the same. If let's take an example of TCS. If the TCS changes its depreciation method, like previously the TCS would have been following the depreciation method of straight line method. Now the TCS changes its depreciation from straight line to reducing balance. Then it must disclose in its notes to account that the company has changes its financial transaction or finance or method of depreciation from straight line to reducing balance. Otherwise, it will not be able for the user of the financial statements to compare between the two, because both the statements will give a different number to you, and it becomes not comparable at all if the company doesn't disclose it properly. Second, verifiability. Now, what do you mean by verifiability? Verifiability means if there are two different observers of one of the information, they should reach at the same conclusion using that information. That means, let's take an example for the same. If the financial statement of the organization is audited by say two different auditors, and they are counting the inventory, for an example, say, both the auditors should reach at the same inventory count at the end of their audit. That is mean by verifiability of the, that is, the two different observers are reaching at the same conclusion using the financial information. Now it comes the timeliness. The third characteristics that comes into picture is your timeliness. That means information should be available on time. Available on time for effective decision making. Now comes the last enhancing qualitative characteristics, that is the understandability. Information which the financial statements are providing, information which the financial statements are providing should be clear and simple enough for user with reasonable accounting background. What so understandability basically means whatever the information that the financial statements are providing, the users who are using that financial information should be able to understand that information. The information should be so clear and so simple that the person who has the accounting knowledge can clearly understand that particular information which the company wants to provide. Only then it becomes important for the users to make decisions out of it. These were the basic qualitative characteristics. So let's just revise what are the qualitative characteristics of the accounting, of the financial information. The first one is your there are so basically there are two qualitative characteristics, the fundamental and then the enhancing. What are the fundamental qualitative characteristics? It's nothing but your relevance and faithfulness. What is relevant information? Information that is capable of influencing the user's decisions. Is the your relevant qualitative characteristics? What is faithful representation? Faithful representation is nothing that the is what the information the company has provided, the actual should has happened. The company is not providing any incomplete information, or the company is not providing error prone information, or the company is not providing any biased information. Company is providing information that has actually happened. The information should be complete, the information should be neutral, and the information should be free from any error. What are the enhancing qualitative characteristics? So the enhancing qualitative characteristics are your nothing but your comparability, your verifiability, your timeliness, and your understandability. Comparability means the users of the financial information must be able to compare the financial statements over a period of time for the company, or financial statements of one company with financial statements of another company. Verifiability, that the different observers can reach at the same conclusion by sorry, by reading the financial statement or by using the financial information. Timeliness, information should be available on time for the effective decision making. Understandability, understandability means information which the financial statements are providing should be clear and simple, so that the users of the financial information, users of the statements, who has a basic accounting knowledge, can use that information properly. And now, let's move on to the next topic, which is the rules of accounting. So there are two types of rules. The first one, which we, I guess, all have read when we have started up with the accountancy syllabus, which is also called as the golden rules of accounting. So what golden rules of accounting does, they divide the entire things into three parts: your personal account, your real account, and your nominal account. What does your personal account golden accounting rule says? Personal says debit the receiver and credit the giver. This personal rule applies to accounts of people and organizations, such as accounts payable or receivable. What your real account says, debit. What your real account says, debit. What comes in and credit. What goes out. This rule applies to assets like cash, equipment, and property. Now comes the other part, the other account, that is the nominal account. What is nominal account? Nominal account says debit all expenses or losses and credit all income and gains. So let's just take an example. For let let's take an example. Salary paid to Mr. X, an employee. So first, what we need to identify is what are the two accounts that are getting affected in this. So one account that is getting affected is the salary expense. The second which is getting affected is Mr. X account. So for expense, which account do we follow? We follow nominal account. So which one do we refer over here? Nominal. Mr. X is a person. For person, what we follow? Personal account. Now, what does nominal account says? Nominal account says that we need to debit all the expenses. So what we will do is we will debit salary. Salary account debit. Now what the personal rule says? Personal rule says we need to debit the receiver. So the here two accounts that are getting affected is the salary account as well as your bank account. Because what is getting account from here is your bank. Just hold for a second. Let me just connect to the AirDocs. So if we pay a salary to Mr. X, what are the two accounts that are getting affected? The salary account, which is a nominal account, as well as the bank account, which is your real account. What does the accounting says? What does the nominal account says? We have to debit all the expenses. So I've debited the salary. What is going out from the business? Cash is going out. What and cash is your real account. So what does real account says? Debit what comes in and credit what goes out. My cash is going out. So salary account debit to bank, or we can call it as cash. Salary has been debited because it's an expense. As per the nominal, we debit all the expenses to bank or to cash because cash is my asset which has gone out from my business as per the real account. Now, what Mr. X will record in his books, what Mr. X will record. So, this point of view we have understood from the perspective of business. What are the two accounts that are getting affected in the Mr. X books? He is receiving salary. Salary was an expense for the business, but for Mr. X, it's an income. And the other is cash or bank because he's receiving the cash or against his salary. Salary is an income, it will form part of nominal account. Cash is an asset, it will form part of a real account. Now, let's try to make an entry out of it. What does my real account says? Real account says debit what comes in. So for Mr. X, what is coming in? For Mr. X, what is coming in? Cash is coming in it in his books. So cash account debit. What is the other account that is getting affected? It's nominal account. What does nominal account rule says? Nominal account rule says debit all expenses and losses and credit all incomes and gains. So is salary my income? Yes, salary is my income. So do I have to debit or credit? Nominal account says let's credit the same. So cash account debit to salary. This way, I'm able to make both the entries, that is salary account debit for the, if we look at from the perspective of the business, it's salary account debit to bank, and from Mr. X perspective is bank account debit to salary. Now, these were the golden rules. Now let's talk about what are the modern rules of accounting. Modern rules of accounting are very simple. Therefore, these are also called as modern rules. It's very simple to apply. It provides me simple this thing. Assets provides me two this criteria. Assets and liabilities. What does modern rule says? This says if there is an increase in asset, if there is an increase in any of the assets, just debit the same. Vis-a-vis, if there is a decrease in asset, you should always credit. What are the modern rules of accounting for your liability? Modern rules of accounting for liability says if is a increase in liability, you should always credit the same. If there is a decrease in liability, you should always debit the same. So, what does modern rules of accounting are saying for asset? They are saying if your asset is increasing, you will always have to debit it up. If your asset is decreasing, you will always have to credit the same. If your liability is increasing, you will always have to credit the same. If your liability is decreasing, you will always have to debit the same. You can just correlate the same with your golden rules of accounting also. So what does my real accounting say? See, so for assets and liabilities, which is the account that I use, not always use, is a real account. What my real account says, I have to debit what is coming in my business. So what is coming in my business? My asset, if my asset is increasing, it's always coming into my business. That means I'm debiting the asset. If I'm paying any liability or if my asset is getting down, I'm always crediting the same. So you can just correlate the modern rules of accounting with the golden rules of accounting also. For incomes and expenses, what does golden rules of accounting says? Modern rules of accounting says. Modern rules says for any income or profit, we should always credit. For any expense or loss, we should always debit. Now let's understand modern rules of accounting from an example point of view. Let's take an example of purchased stock on cash. Now just tell me what is happening in this transaction. My stock is increasing in the business, and since I'm purchasing the stock on cash, my cash is going down in the business. Stock is my asset, cash is also my asset. What does modern rule says? If there is an increase in asset, we have to debit. So my stock, I'm increasing in my, there is an increase in my stock. So stock account debit. What does modern rule says? If there is a decrease in asset, then we have to credit. My cash is going down to cash credit. So this is one example. Now let's combine this example between asset and liability. Just give me a minute. Now let's take combine this example along with your liability. So let's say we purchased our stock on credit, say from Mr. X. Now what is happening in this particular example? My stock is getting increased, which is an asset for me. My liability, since I purchased these goods on credit from Mr. X, Mr. X becomes my liability. My liability is also increasing. So, what the modern rule of accounting says, if there is an increase in asset, we have to debit. So, what's going to be the entry is stock account debit. What the modern rule of accounting says for the liabilities? Modern rules of accounting says if there is an increase in liability, we have to credit the same. If there is a decrease in liability, we have to debit the same. In this example, what is happening? My liability is increasing. So what need to do, I have to credit the same to Mr. X. So this provides me with a particular entry which I am able to make because I know the modern rules of accounting. So if you know modern rules of accounting, you can make any entry anytime. Modern rule account Modern rules of accounting will help you a lot in particularly preparing all the general entries, recording all the transactions that are happening in the business. Let's wind up over here because the next topic that we have to cover is a bit lengthy, which we will not be able to cover in this particular session. So I hope I'm able to make proper, I'm able to revise you properly. What are the fundamental characteristics of accounting? Who are the users of the accounting? Because see, these are some of the basic questions which are typically asked in the ACCA exams. Who are the users? For what purpose they use the financial information? What are the qualitative characteristics of the accounting? This is the most famous questions for the ACCA's exams. Then it comes, what are the rules of accounting? On what basis you pass the journal entries? What are, if you know the modern rules of accounting, if you know the personal golden rules of accounting, you will be able to pass any journal entry in the business. That is something which is very important. Mithun, we can close the recording now. So let's meet tomorrow, guys, for the new session of the management accounting. Let's revise the concept of management accounting over there tomorrow. Mithun, are you there in the call?
Yes, Ashish. Thank you so much.
Yes. Mithun, I hope I was able to make you understand at least what are the basic of accounting and everything.
Yes, absolutely, Akash. It is, Ashish. It is really good. I think I've learned a lot of things on this.
Thank you so much. Thank you so much.
Thank you, Ashish.
So tomorrow same time, Mithun, this is the recording is stopped, right?
One moment. I think I have to end the meeting to record, to stop
Okay,
recording.
let's connect over a call. Let's connect over a call then.
Sure. Thank you so much, Ashish.
Okay, thank you so much.